So welcome back to my channel, and today I'll be showing you how to use liquidity and market structure together in a simple way. Okay, so I'll be going from basics to understanding where the inducement and overall liquidity traps are most likely going to happen. So let's get right into it. So first of all, we need to understand this simple model. Okay, so this is super basic, just understanding swing points. We have the first candle, then we have the second candle, which swept the previous candle's high, and then the third candle closed above the second candle. Okay, so this will be the swing point. Same thing goes for a bearish market. As you can see, first candle, second candle swept the first candle, and the third candle broke below the second candle. You'll never know when the swing point is confirmed until we have the third candle close. We can have the first candle, second candle, but let's say this candle wasn't here. We never know that this is already the swing point unless we have the third candle closing below this low. Okay, so we'll only know when this is a swing point with the third candle. Okay, hopefully it makes sense. This should be super simple to understand. And we need to understand this simple method to then go over inducements, liquidity traps, and stuff like that. So let's go over some examples on a GBP USD. So for example, we got nice bearish movement like this. Price creating lower highs, lower lows, lower highs, lower lows. And how can we actually understand when the lower high was confirmed so we can catch sells from these levels to create lower low? Okay, so as I said, simple 1, 2, 3 method. Okay, so always you mark the highest candle as a number 2. Then the candle to the left would be number 1. And once you're going to close below the second candle, okay, so we closed below the second candle low, which is this one. This would be considered a swing point. Okay, as you can see, we got multiple candles around this level, but it means nothing unless we sweep the second candle's high. Okay, if we're gonna sweep the second candle's high, now this is number 2, this is number 1, and once you're gonna break and close below the second candle, this will be considered as a swing point. Okay, so in this case, this is the highest point. We close below the highest point with this candle, so this will be considered as a number 3 and valid swing point. Okay, hopefully it makes sense. This should be super easy to understand. Same thing around this one. So always find the highest point, which would be this one. So this is the second candle, the first candle, and the third candle is the one that confirmed the close below it. So we had the first candle below the second one. Okay, second one always gotta be the highest, and the third candle is confirmed after we're gonna close below the second candle. Okay, as I said, the third point can be multiple candles, but we gotta close below the second one. Okay, the second one is most important, so this is just basic. So now we know that this is the daily swing point. Same thing with this one, the first daily candle, second and third one confirmed after we close in below the second one. And how can we actually use it? Because as you can see, if you look at this price action, we have this break. So most people seen this as a sell side sweep. Now we have this market shift with aggression. So these should be a valid buys. But as you can see, we swept this low again and then continue higher. Same thing with this one. We are going lower, but we are breaking the previous highs. As you can see, this would be the lower high, lower low. We broke above the lower high. So now, should I look for buys or should I just wait for another break like this or this one? So as you can see, if we look at this price action, we got a lot of traps everywhere. The market is not moving like this all the time. Sometimes, as I said, we have some nice movements like this, but sometimes we're gonna have something like this. Then again, break above it, then break below it. Most people don't know how to trade these conditions, so I'll show you in a bit. By the way, if you understand liquidity concepts to more details, you can catch buys from these levels, sells from these levels with super small stop losses. But as I said, I do not recommend it. I'll show you some small examples. I will not go into details here on YouTube, but basically this would be fake BOS inducement after we swept this low. Okay, so sell side liquidity, most people will be looking for buys after this market shift, but for me this is just trap for early buyers. Okay, so we have this change of character, bunch of buyers will be around this level, having stop losses below this low. So once we're gonna sweep the first low that created the push, I call it the early buyer trap. And now we can enter buys around this level. On a 15-minute after the early buyers got induced, can look for our entry model. So let's say we entered around this level, stop loss below this low, and we can target this high right here. But this is just example, so let's go back to the main points. So as I said, we got multiple fake movements like this, and it's happening almost everywhere. So let's go back to the hard time frame to see how can you avoid these fake movements. So first of all, we need to understand the hard time frame direction. So in this case, the daily is creating lower highs, lower low, lower highs, lower low. And as you can see, the swing point was confirmed after we closed below this low. Same thing with this one. Okay, so swing point confirmed after we closed below this low. Okay, so we closed below it on a Tuesday, and same thing on this one. We closed below it on a Tuesday. So let's mark the Wednesday opening. Okay, so this is the Wednesday. Same thing on this one. So now the market is going lower. We have confirmed the swing point. So this low should be the target. Same thing on this one. Price is going lower, creating lower lows, lower highs. The swing point was confirmed. So now this low should be the target. So on a Tuesday, we closed like this. So from Wednesday, now we have this whole daily range for sells. Same thing on this one. So from Wednesday, we have this daily range for sells. Okay, so now the next few days, we only gonna be selling. Okay, let's go to 4H. So we have the swing point, we have the Wednesday open. So now the 4H should be clean, just creating lower highs and lower lows. So we have this lower high, lower low, lower high. Then we break below the lower low with this candle, create lower high, lower low, lower high, until we break this low. Once we're gonna break this low, now we can expect some type of 4H, fake BOS, inducement lower. But once we have the swing point, the 4H levels will most likely have zero manipulations. Okay, so as you can see, this high never got broken, this high never got broken, this high never got broken as well. Okay, so this high is higher than this one. So same thing on this price action. So we have this swing point. Wednesday opened around this level. This is the last lower high, lower low, lower high, lower low. And these lower highs never got broken until we break below this hard time frame push. Okay, so on a daily, this looks super clean. On a 4H, this will become clean after we have the swing point confirmed. And once we're gonna take out this low, now we can expect some type of traps, the market going higher. By the way, how to enter these traps, I'll explain in the next video. So this is just a hard time frame direction. So a lot of people will be buying after liquidity sweep. So we have this liquidity sweep, market shift. But as I said before, the first push for me would be trap for early buyers. Once the early buyers got induced, this would be the real movement to create lower high and then go lower to create lower low. It sounds super simple, but if you're gonna use this type of understanding on a hard time frame, when you trade in EURUSD, GBP/USD and pairs like that, you literally have this whole area for sells with no manipulations. Okay, so let's say you entered around this level with super small stop loss, targeting this low, because we understand that the swing point was created, and from Wednesday we can expect clean 4H levels to be created until we take out this low. Okay, hopefully it makes sense. And now let's go for the candle printing, which is also super important. So when it comes to candle printing, as you know, I only trade indices and gold, and I use this the most on these pairs. Okay, this is for someone who wants to trade forex. If I was starting with forex, this would be a beautiful information for me. But now let's go over candle printing that I use on indices. As I said before, indices are moving with momentum, so they will not create some type of pullback like forex pairs like this. Okay, they will just continue higher. And if you know how to enter these small pullbacks, which is literally my strategy, I'm entering around this level to catch the momentum to the upside. So this is how I trade. So let's go into details below it. So let's say this is 1H time frame. Okay, so we got these 1H candles. the next 1H candle will open at the same level where the previous candle closes. So the 1H candle closed like this. The next candle opened and went higher. Okay, during the opening, price went lower and then went higher. Okay, so let's say this is 5 minute. This is the 1H. So this is the same price action, just on a lower time frame. This is 1H candles. This is 5 minute, like multiple candles. So as I showed you before, we have push, pullback, push, pullback, push, pullback, push. And we want to catch our entry point inside the pullback to create push. Okay, hopefully it makes sense. And usually when we have some type of opening, for example, on a 1H candle, we can expect fake move to the downside to create a trap to then go higher. So as I said in the previous video, we have this next candle open. The wick is manipulation. The body is distribution. We want to enter inside the manipulation to enjoy the distribution. So let's say the 1H candle closes at this level. Now the next 1H candle will open. So most likely create wick to the bottom and then continue higher to create the body, aka distribution. So this is just for hard time frame direction. I will show you example of Jim for the trade that we took with Discord. So in this example, as you can see, price is going higher. For example, we got new 4H candle opening around this level. So the previous 4H candle looked something like this. Okay, so as you can see, this bullish price action is this 4H candle on a hard time frame. Then we have a next 4H candle opening around this level. So you can expect wick to this level and go higher. I'm not going to say why this level, but this, I said that price will tap into this level and then continue higher. I literally predicted everything into Discord, the entry point, stop loss. So once this 4H candle closes, I waited for price to trap sellers. As you can see, we got this fake BOS with aggression. So a bunch of sellers entered the market. We entered buys instead around this level, SL, below specific low. And this was just super easy trade. Okay, so bullish candles like this. The next candle opened, create another wick into some type of levels on the left where we can expect clean entry point inside the manipulation, inside the wick, and we can enjoy this distribution. And yeah, hopefully it makes sense. This is just understanding the hard time frame. So you can use all these examples on every single trading pair. Some of you trade forex, some of you trade indices. So in this video, I showed something for everyone. So that's it. And if you got any questions, you can just DM me on Instagram and see you next time.